Okay, so what if the housing market doesn't crash? And all of you who voted that prices wouldn't drop on those polls that I asked quite a few times are actually right. Well then, my friends, we would have much to discuss. The first is me holding my hands up and saying I was wrong, which I'll happily do, by the way. Should we blast off into these regions and see house prices continue to rocket? But more importantly, friends, what does it actually mean for yourselves? And by you, I mean those either looking to buy a property this year or those who already own some level of property right now, be that residential or even investments. Well, that's exactly what we're going to be discussing today. And before we look at the impact of the house prices, should they continue to rise, let's just look at a couple of facts that we know right now. The house to wage ratio is almost trolling us right now, as you can see from this image, and further increases in house prices won't be welcomed by many across the UK. Now, lower wages will also mean that you will get less of a mortgage, which, if you think about it, therefore means higher deposits, which wouldn't necessarily help anyone getting on the property ladder. Next up, inflation is high. It's higher than the reported figures that we're often being quoted, but even if we are to believe that they are the correct figures, it definitely needs to calm down. And until then, expect the Bank of England to play around with those rates. And then, my friends, we have mortgage rates. Unfortunately, mortgage rates aren't as fun as what they used to be a few years ago. The days of cheap lending have obviously disappeared, at least for now. And I know this through my own portfolio, and I'm sure many of you know this too. Just the other day, I was speaking to one of my students who was offered a rate around 2.61% last year, but due to the conveyancing process and the actual purchasing of that property taking a bit longer than usual, their agreement in principle finished. And now, having gone back and got another rate, they've been quoted over 5.5%, which is absolutely bonkers, literally more than double. Following this, we have rents. Rents are still rising across many areas in the UK. Now, will we see people having to dip into their savings or cut down further on their monthly purchases just to afford to be able to pay their rent? Or will we sadly see more rent arrears in the future? Who knows? Time will certainly tell. And after that, should we continue to see a rise, we may just see the UK becoming more of a renting nation than many of you had probably hoped for. Now, conscious of spreading too much good news in this video, let's actually look at some of the positives and the flip sides to some of the points that I just mentioned earlier. The first is I think the government will definitely add in some more help to buy type of schemes. Now, I've got plenty of videos on these on the channel, and every time I come across one, I will always update it in the weekly property update videos. So make sure you check those out, my friends. But I can definitely see the government incentivizing people to get on the ladder and take out a whole lot of mortgage. And then after this, we have those of you who already have properties, whether it's an investment or a residential. You could actually be getting wealthier if the prices continue to rise, at least in terms of equity anyways. Now, of course, selling a property because it's gone up in value doesn't necessarily make you richer in real terms if you go out and try and buy another property, because the likelihood is that's also increased in value too. But at least from your net worth or from an asset perspective, you could argue your wealth has increased. And if you're on a repayment mortgage, it could definitely help you get in towards that hurrah moment of paying down your mortgage, which I'm sure many of you want to do right now. Following this, we have mortgage changes. Now, I mentioned recently how this year we may see mortgage companies trying to steal customers from each other. I mean, I'm sure they've always been doing that. And in order to do this, they obviously need to provide more competitive rates. So although it's not the 2% that we probably got used to, we may see better rates than some of the crazy ones that were floating around towards the end of 2022. Landlords. Now, I need to speak about landlords too, because landlords may actually be a thing of the past. Or at least a typical private landlord that so often gets bashed in the headlines and you and I are familiar with. You see, we know institutional buyers are on the up, and we know that tax changes, more power to tenants, the potential of EPC overhauls, and the possibility of no-fault Section 21s coming into play. Being a landlord really isn't as profitable or as easy as maybe it once was once upon a time. We therefore may see a change in that market. Now, what this could mean is that as house prices rise, landlords may simply be looking to jump ship and cash in on their investments, potentially adding more stock to the housing market. Now, of course, my old argument is that if a tenant can't afford the rent or can barely get by paying the rent, the chances of a particular person buying that house, should it go up for sale, is unfortunately low, and therefore it may just be passed on to an institutional landlord for that tenant to now live under. Now, whether or not that's a better outcome, that remains to be seen. Only time will tell, but it will be, at least from an investor's perspective, a great time to sell if, of course, that is one of their goals. So friends, let me know your thoughts below. I still think personally we are going down, but as mentioned earlier, I'm happy to hold my hands up if I'm wrong.